I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned into Traders Nation. Thanks for making us a part of your day. Donna, I've got a packed show. Sam McElroy, he's co-founder of at Financial. He's going to be back with us here today. We're going to be talking about, there's a survey out there of CFOs, Chief Financial Officers, and they believe that the recession is coming in. We're going to get some hard numbers on that. You're not going to want to miss that. Plus, Don and I have kept retailers on our list. Payment processors also. What's going on there? Numbers are looking pretty good. You're not going to want to miss those numbers. So we got gas, we got stocks, we got some commentary that's going to be melted in there too, and a whole lot more. Stay tuned right here at Traders Nation. We'll be right back.
Traders Nation, if you promise not to tune out, we promise not to talk about you while you're gone. Traders Nation. Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation, delivering what you want when you want it. Traders Nation. Traders Nation. Live.
It's on the whole time.
Bringing traders coverage of the markets, solid trading strategies, potential hot stock movers, world-class guests, informative callers, and unsurpassed market chatter for traders to take all the way to the bank.
You guys got some great stuff coming out. I mean, the great station.
Stay on top.
This is always changing. It's always fresh. Something new.
Stay tuned in. Traders Nation.
It's always something to look forward to.
Clearly, you can hear the difference. Traders Nation. It's the Traders Nation Network.
Hi, I'm Steve Forbes, and you're watching Traders Nation.
You are watching Traders Nation. Thanks for staying with us. Hey, Don, I want to let everyone know about Pro Online Trader DVD. Get a copy today. Listen, when we talk about stocks and charts and candlesticks and support and resistance, fib retracements, all that good stuff, and it doesn't make sense to you, get a copy of Pro Online Trader DVD. Head on over to TradersNation.com. Click on that More button, and we'll get you taken care of. Don, it's like $29.95 plus shipping and handling, man. I'll get to you in 2-3 days. All right, head on over there today. Hey, Don, payment processors on our list here today. PayPal, certainly on the top. Man, these are good-looking charts, man. Currently trading at $91.98, Don. 3.6 million shares exchanging hands here today. Up $2 since we spoke about it last. Listen, I'm comfortable in saying, if you bring your charts up, you'll see what I'm talking about. The old resistance is now the new support level. Okay, we've been talking about it. It fell down once, once below that resistance. Now it's back above that. It's trading sideways above that old resistance. I'm going to say it's now the new support level. Everything's looking good here, Don. MACD is turning up. Money flow's turning up. All these indicators are looking nice here today. This thing is ready to move to the upside, in my belief. Don, your thoughts?
And I believe we have earnings coming for PayPal. Look, this stock is getting close to its old high.
Okay.
And it is on a little bit of a run right now today.
Sure.
And even in these down markets, I think we have to consider that consumer demand is at an all-time high now insofar as paying for these things that we buy. And it's almost embarrassing now when you walk in and you're using cash.
I know.
I mean, especially if you go to a Starbucks, it's embarrassing.
What do they look at you like? What planet you from? You know?
It's
like it is embarrassing. I see it, Don. These guys are like, "What are you doing? What is that?"
That's right, and so I guess the mantra today is, well, you just keep pulling out a credit card or a debit card, and you keep you just push it until one works, and that's it.
That's right.
You know, if you get declined several times,
that's okay.
Just try your wife's or your girlfriend's.
That's right. There's another one somewhere that you could just pull out. Yeah, like Don says, man.
But seriously, on a worldwide basis. The business is growing very rapidly, so PayPal's right in the center of it. And, of course, what we're also seeing on a worldwide basis is a ton of money being poured into various startups. And, of course, we've talked about some of these startups. But our focus today is on PayPal, and I guess we're going to talk about Square next.
Yeah.
But these are handsome charts right now.
Yeah, they totally are. Indicators are looking pretty decent. I'm liking what I'm seeing. It's just forming today. You get some crossovers today on the MACD. You get some turn-ups on the money flow. A nice green candle forming here today, long body. So all these things are really starting to shape up on PayPal. Certainly, same thing with Square. Let's go on that, Don. SQ.
Yeah, well, if you take a look at Square, I mean, it's up 4% today.
Yeah.
This is another one. Stock got beat up a little bit here over the past couple of months.
Yeah.
But it's trading up. Where are we today? We're at
71.86.
And it's up 73.38. I'm showing over here on.
Is it now? Okay.
Nice. Yeah. So it's up. It's up. Almost 4.5%. So this stock is screaming today.
Yeah.
And once again, it's another one, San Francisco based. This is a same guy that founded Twitter, founded Square. But the point is that this company is kicking today, and it's been kicking. And once again, to repeat, consumer demand for payment services worldwide is screaming. So here we go.
So hopefully, Don, I'm hoping that folks are paying attention, writing this stuff down as they watch Traders Nation after every episode, that they got these on their watch list, because they're certainly making bank. Square would be up $6 since we spoke about it last.
Right.
And I don't think it's over. Okay, I don't think it's over. The way it's shaping up, the technicals are shaping up on this, Don.
And don't forget, on Square, they're really focused on the small businesses.
They are.
And they introduced, I believe it was last week or the week before, where when you're using, as a merchant, when you're taking in your charges now, they've introduced a product where you can get your money right away and not have to wait. So that's another one. So they're catering to the small business, and right now over at Square, business seems to be screaming. And, of course, the stock right now up. And even though, the market's been weak, there's been a lot of volume in a few of these stocks, Square and PayPal amongst them.
Sure.
And but they seem to be bouncing right back.
Yeah, absolutely. And you're right, Don. These small businesses, with that move for Square to come out and be able to pay out faster, these small businesses need that money like right away. They really can't wait. They don't have a lot of capital like Google and Apple and all these people. They only have vaults of cash sitting somewhere, right?
Yeah.
So these small businesses need that that money flow to keep their business flowing and growing, okay? Hashtag. So Square, SQ, keep it on your radar there, Don. Let's go.
A lot of volume today on Square, and rumors around, and I see some posts and some readings here that Square at around $73, $74. Don't be surprised if somebody comes along and doesn't try and acquire this company.
Interesting. Yeah, you know what? There's been some acquisition buzz going around on these too.
Oh yeah.
So with some good earnings and acquisition buzz,
there's plenty of money sloshing around looking for deals.
Sure, that's right.
And then we can move on here and talk about the legacy companies, MasterCard being amongst them.
Absolutely. MasterCard currently trading at $199.22. 663,000 shares exchanged in hand so far here today. It's holding its own right here, that 200-day moving average. It's channeling sideways. Not big moves or big events, but nonetheless holding its own here, MasterCard, Don.
Yeah, well, great business. Now, MasterCard, I'm looking at the charts too. If this stock can get back to 205, this stock could really move and bust out. So MasterCard, another, obviously a large company. They just made an acquisition over in Europe to add to their portfolio of product line. But this is another one, and it's having a pretty good day today.
Nice.
And the chart, look, Kurt, you're the expert chart reader. You're far better than I. But take a look at the chart on MasterCard.
Yeah, absolutely.
It's, holding its own, and,
it is.
It's another one you got to keep an eye on.
Again, it might not excite certain people. Again, like Don says, if you bring your charts up on this, I mean, it's doing this sideways action. It's right there at its 200-day moving average. It's not. There's not big up days like you're seeing on PayPal and Square, right? You're not seeing that in MasterCard, but nonetheless, it's holding its own. And that's pretty nice. That brings comfort to some traders and long-term prospects when it comes to the payment processing area. So MasterCard certainly is holding its own here today. MA is a ticker symbol. Same thing with Visa, Don. Let's go on to Visa. Visa currently trading at $137.60. A little less expensive than MasterCard, that's for sure. 1.6 million shares exchanging hands on this, Don. Trading right above its 200-day moving average. Okay, I like that. To me, it's always bullish when it's trading above its 200-day moving average. It's bullish. It may not be having big moves, but still bullish. It's trading up above its 200-day moving average. It's kind of like the benchmark, the waterline, if you will. It's doing its horizontal jig, but if you look, there's this trend line from couple, let's say a month ago. There's this trend line that's coming down like this, and so it's getting squeezed in this particular area. We'll see if it breaks up to the upside. That's what I like to see. Visa, Don?
Well, once again, demand is strong. Visa's trading up today. It's not just like some of the other stocks have really been beaten up, but they tend to bounce back, and certainly Visa is bouncing back, and we have earnings coming. I wouldn't be surprised to see this stock put on 5 or 6 points on decent earnings. So it's one we've got to keep our eye on here.
Without a doubt, Don. So here's the other thing too, Don. So I mean, with the fourth quarter stuff coming out and earnings, with fourth quarter numbers, retailers didn't fare so well, but payment processors did, right? And
that's it.
So that's where the earnings is going to come out, and that's going to be the tail of the tape, Don. Okay. Amazon, let's go on to retailers real quick. Amazon, AMZN is the ticker symbol, currently trading at $1,640 a share. 1.4 million shares exchanging hands here today. Couldn't get through that 200-day moving average. It's down $40 from it, actually. So, Amazon, keep it on your radar. Don, coming up next, we've got Sam McElroy. He's going to be with us. We're going to be talking about, there's a survey, Don, of CFOs that's out, and they say that a recession's coming.
Oh.
We're going to get the details of that, Don. And we're going to find out in the numbers, too, from Sam. Stay tuned. We'll be right back.
Traders Nation salutes America. Stay strong, stay proud, and stay in the green with us. Traders Nation live, bold, and packed for profit every weekday morning. Traders Nation, live, bold, and packed for profit. Sign up today for our weekly HTML newsletter and check out the Traders Nation store for products to enhance your stock trading day. Traders Nation, what you want, when you want it. Traders Nation.
Hey, Jeff Carlisa here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again Sam McElroy. He's co-founder of @Financial and @Financial Investment. Sam, welcome back to Traders Nation. How are you today?
I'm doing well. Thanks for having me. How are you?
Good. Good to see you in the new year, by the way. Yeah, I know. Well. I know. We're close up to February now. Good gracious. So recently, there's a survey by John Graham. He's a finance professor at Duke's Fuqua School of Business, and what's going on here is that he's saying that there's 82% of chief financial officers, CFOs, polled believe a recession's going to hit and start by 2020, and nearly 50% think the downturn will occur next year. Your thoughts on that?
Yeah, to a large degree, I have to say that I agree with the results. There's a variety of factors that goes into it, but I think that we also have to play around with words and semantics here, because a lot of the times when we talk about a recession, what comes to our mind is the Great Recession. So we're thinking, we're saying that we're going to be back where we were in 08, 09, and that's not necessarily what they're saying. What they're really saying is that they think that there's probably going to be somewhat of a slowing of the economy, that we're going to see some contracting of the economy to some degree, enough to qualify for a recession. And I think that is highly likely.
Right. Okay. So even with the economy as strong as it's going now, and I know there's some other technical analysis that come into play, for instance, the flattening of the curve model. We'll get into that later on, but so even a slowing, there's certain criteria that needs to be met, and I don't even know if there's who says that we're officially in a recession. I think there's a couple boards that they kind of argue back and forth on are we in a recession or not in a recession, right? Didn't we have that argument once? Yeah. So I mean, who qualifies a recession? I mean, a slowing. Yeah, there's going to be a slowing in anything, maybe in sectors, and I get that some large employers are laying people off. GE for one of them, maybe, I think, or GM. But that's isolated certain sectors. I mean, are we looking at an overall economy slowdown or just sector hit?
I think it kind of waits to be seen. What the magnitude is for that. I think part of the problem that we're kind of running into is two pieces. part of it is that when you're in a global economy, then you're looking at what's happening domestically in terms of the buying of goods and services, but you're also looking at your exports and what you can get from there.
Right.
You know, when you have increased protectionism, when you have difficulty and you're negotiating trades and there's, you know, the quote-unquote trade wars and all this other stuff, that can have an impact sometimes on businesses and just things that are happening. But I think the part that a lot of us are kind of overlooking also, because, you know, many of us kind of hold this belief in a sense, in an ideal world, that as long as things are good, we should always have an expanding economy, but it doesn't really work that way necessarily. You know, part of this is just based off of demographics in the United States as well, I think, to a large degree. You know, we do a lot of retirement planning. Is probably the predominant part of our business, and so we primarily work with people in the baby boomer population, helping them transition from going from earned income to asset income. And one of the things we notice is that they are not spending. You know, they're shedding debt, they're downsizing, they're not buying bigger houses or bigger cars. Their kids are already off on their own. They're on fixed budgets. They're saving up. So you just look at, okay, well, if we are going to have this consistently expanding economy indefinitely, well, where is the purchasing power coming from? Because I don't see it necessarily from the consumer side right now.
You know, that's a great point, because I just wrote down consumer side spending. So if this consumer side spending is going to slow, somebody's got to make that up. And like you said, where's it going to come from? Who has the money that's going to spend that money? Because that's what it takes to get this economy continue to move. Not even moving, but continue to move. So where's that going to come from, Sam?
Yeah, and that's the part that that's the part where I feel like I have less visibility. So ordinarily you would say, well, then it has to come from corporations, because that's really the main two places that it's going to come from. But when I look at what corporations are doing, I see a mixed bag there, I guess. I see a lot of corporations that are in expansion mode, that are growing and that are doing a lot of things. But then, like you said, you see corporations like GM and Verizon that, in order to get ahead of what they see as changing economic conditions, are closing plants and laying people off. And so the question, I think, kind of becomes, well, which side wins? You know, are the companies that are expanding going to expand to the degree that they offset companies that are contracting? And I don't know. And will it be a net difference enough to make up whatever we don't see from the consumer side of spending, enough to kind of keep us moving forward with consistent GDP growth?
Right. That's interesting, because you're absolutely right. What's the net? Are we gaining more than we're losing? As long as we're doing that, then potentially we have some direction on which way this is going to go. All right. So this survey also goes on to say worst case projections, you would see capital spending drop in 2019, accompanied by flat hiring. And certainly we've been discussing that here today. And also, I don't know, like you brought in the fact that we were working in this world economy, and certainly we are. Do you see any particular sectors that may stay strong that we may continue to see growth in? For instance, let's say healthcare or technology. And then to the flip side of that, what about some weak areas and weak sectors that we may want to stay away from?
Yeah, I don't see any reason why, you know, the same things that we've kind of seen over the last couple of years don't continue to play out this year. Just looking at the direction of where advancement is made, where there is room for rapid expansion, I think you still have to say, well, technology, in a sense, is kind of where the market is hanging on. And I think healthcare advances in biotech, pharmaceuticals, and stuff like that is probably an area that I'm kind of keeping my eye on as well. I think areas that we've seen some difficulty or some sluggishness is probably going to be in the things that people can forego. You know, I feel like we've seen hiccups in energy. Not that people can forego that, but I think that we've seen a shifting dynamic in energy in general, probably over the last 4 or 5 years now, where energy used to be a really big area for rapid expansion, but now, you know, it's kind of good and bad going back and forth. I think consumer discretionary is a place where you'll probably see some potential pullback as well. I think that, you know, the general rule of thumb is that when things start to slow down a little bit and people get a little bit more nervous, what you see do really well is things like utilities, because people want to be comfortable in their house, so they make sure their electric and gas bills are paid and all that kind of stuff. But they maybe forego the fancy dinners and the travel and all the other stuff like that. So I would think you'd probably see some of that, you know, replicate itself. And then, you know, over the last year, I feel like we've seen real estate really start to have some issues as well in terms of flattening of market movements and other stuff like that. We have a close alignment with a real estate company here in Chicago, and so we end up working with and talking to a lot of real estate brokers. And I know last year was a really tough year for many of them.
Interesting. So, you know, there's this euphoric buzz, that's going around in consumer spending. But I think you got something there. Whereas, if we start to see this recession, we tend to forget, right? But I don't know. This last great recession was just stung people so bad. I don't see forgetting that anytime soon. So I think that euphoric feeling that's going around on spending, I think it's going to wake people up and jack their collars up pretty fast if we start to feel that recession coming around again. Your thoughts?
I think that's absolutely true. And no matter how much we talk about, the old axiom of buy low and sell high, just, I guess, human emotion just is too strong. People don't do it. I can't tell you the number of conversations I've had with people in January of this year, and because the market, it fell almost 9% or maybe a little over 9% in December alone, so many people tell me, you know what, I just went ahead and went to cash, or I just went to, I pulled out and went to the money market, and it's like, well, maybe if you had done that in September, I'd be like, well, that's a good idea, but don't do it in December when it's already fallen.
It's already fallen.
I feel like it's a stuff. Yeah. Right, it ends up being a self-fulfilling prophecy,
It totally is. We're out of time, unfortunately. People are like scared cats, man. They got their claws in the ceiling ready to pull the trigger. But like you said, sadly, it's too late down the road. Where can we find you at? Where's the website, Sam?
Yeah, it's just www.atfinancial.com.
All right, head on over there, atfinancial.com. Thanks, Sam, for being with us today.
My pleasure.
You bet. Stay tuned. We'll be right back. Welcome back. You are tuned in to Traders Nation. Thanks for staying with us. So far, so good, Don. Head on over to Sam's site. Great information from Sam McElroy here today. Hey, Don, I want to talk about, get back to the retailers really quickly. Amazon, AMZN, currently trading at $1,640 where we left it off last time. Don, what's going on?
Well, it's putting on a little bit of a show here today. And when I say show, it's going nowhere. It's up a few bucks right now today. But, if you take a look at this stock, today looks like a day where it's just kind of treading water. Now we've got earnings coming up on Amazon in about 5 trading days.
Okay.
So that's a stock, as everybody knows, can go $50, $60, $80 in either direction quick.
It sure can.
And this is one that if you're trading it can make your heart stop.
Yeah, without a doubt. I mean, listen, let's face it, if you're a swing trader, day trader, or whatever, you have got to know this stock. Otherwise, you can get a haircut rather quickly. All right? If you have one great trade, that doesn't mean anything because you can lose it just as quick, okay? Don't think you're on top of the world if you got one great trade with Amazon because you can lose it that fast.
But look, in talking about these retailers, the money continues to be spent. We were in the previous sector talking about the payers.
Yeah.
Now we're talking retail, and you have to ask the question, as you and McElroy were just discussing, where is the money coming from?
That's right.
Because if you take a look at the credit cards, we're at an all-time high.
Yeah.
Amazon just seems to keep cranking it out, and obviously one of the things with Amazon
we're out of time.
is okay.
Do you own anything?
No.
I don't either. Have a great day.